Hello and welcome. You're watching FYI. I'm Sonal Mehrotra Kapoor. Now, if you've been tracking the stock market, one thing that really stood out this year, apart from the massive bull run, has been this IPO frenzy that seems to have come in. The latest to get on that bandwagon is Nykaa. That's right, ladies, the app you and I often end up using for all our needs. It's got toiletries, it's got makeup, it's got grooming, men as well. Now they're expanding into fashion. There are a whole host of stuff, even that success story, a huge one. So we thought, as Nykaa prepares to get in and get listed very soon, and they'll be opening up, in fact, for all of you to apply on those IPOs very soon, let's tell you everything you need to know about it really to help you make up your mind. So let's get into our explainer. What exactly is an IPO? Let's get some basics first. Now, it's a privately owned firm listed shares on the stock market, making shares available for purchase by the general public. Why do they have them? Because companies can then raise additional capital by selling those shares to the public. If you and I have that share, we can have that part ownership of the profit making, of how entirely the company is doing, etc., and how the share market actually behaves on that stock. Now, this is done often because they want to expand business, fund R&D or pay off debt. Other avenues for raising capital may be too expensive. Other avenues like venture capitalism, private investors, etc. This is also maybe a huge opportunity to provide good amount of publicity for the company as well, and may help the company secure better terms for lenders. But talking about IPOs, like I said, it's been a year where IPO frenzy has taken place. Let's look at some of the big other IPOs that are to be listed this year. LIC, Bajaj Energy, Go Air, Paytm, another big one, MobiWik as well, Adani Wilmar, Muthoot Microfinance, VLCC Healthcare, Med Plus Health Services, and Aadhar Housing Finance. All of them the big listings for this year. How big is it in terms of market share? We'll tell you. So wait till the end of that explainer. But let's now quickly jump into Nykaa and tell you the key bits and everything you need to know about Nykaa. So it was founded in 2012 by Falguni Nair, former investment banker. Now, leading multi-brand beauty personal care platform, we all know that by now. The promoters in this case are Falguni Nair, Sanjay Nair, the Falguni Nair Family Trust, and the Sanjay Nair Family Trust as well. Now, promoters at the moment own more than 50% share in the company. And Nykaa is ramping up a presence in the Indian fashion scene. Their Nykaa Fashion, another app that they've launched, is what they want to look at moving forward. Their net profits, we culled that out for you. Well, in financial year 21, their net profits went to 61.9 crore. It's 86.7% of online gross merchandise as well through the mobile apps. All of that figure as of March 2021. But Nykaa jumping on the IPO bandwagon, what exactly are they thinking? And what are the key dates to remember here? Well, they open up for subscription on the 28th of October. The IPO closes on the 1st of November. The price band of the initial share sale is going to be roughly around 1,085 to 1,125 over there. And Nykaa, their aim is to get a total valuation of over $7 billion. That is the number that they're looking at. Investors shall be able to make bids of minimum of 12 equity shares over here, in multiples of 12 equity shares thereafter as well. And offer actually includes a reservation of up to 250,000 equity shares for purchase by eligible employees as well. So they end up gaining huge over there. Meanwhile, their game plan is essentially that the company plans to use this IPO proceeds for expansion. They want to open up more retail stores and warehouses. You must have seen some Nykaa stores come up in malls these days. They want to expand that presence from online to actually in on-ground presence as well. The company also plans to retire some of their debts here, and the aim is to store up profitability, bring down interest costs as well. But so that's all about Nykaa. I told you the big IPO frenzy and how big it is really in the country right now. Well, cumulative, and listen to this figure very, very carefully, cumulative quantum of fundraising through IPOs this year alone is expected to cross 70,000 crore. And this is going to be landmark. This is the first time ever. First 9 months of 2021 has seen 41 IPOs hit the market, and the previous high, last time around we actually saw so many IPOs come in, was 2017. That was around 67,000 crore raised through about 36 issues over there. Then we know what happened in 2018, and rest is history, as they say. 2021 with a huge jump from previous years as well. 15 IPOs already there, 26,613 crores raised, and after the Nykaa IPO, there is Fino Payment Bank and the Sikachi Industries as well that are in the lineup. So very exciting space. Lots of people are looking at it, and a lot of retail investors are looking at it with a very, very keen eye. So we thought, let's help you get more information on that. So joining us on the program today, we have Dhirendra Kumar back with us on FYI. Lovely to have you back, Dhirendra. We also have Ajay Bagga joining us, market analyst and investor, and also K. Ganesh is back with us on FYI. Lovely to have you guys back as always. Let me give Dhirendra the first word over here. When we look at IPOs from, as always on FYI, we keep a very retail investor outlook to try and see how to look and approach these IPOs. How are you seeing this frenzy going on, and what are the indications here as of this moment when it comes to Nykaa?
No, as you are rightly pointing out that it is a frenzy, it continues, and it has very less, connect with reality. And I'm quite cynical about it, but it doesn't matter. Right now, there is so much of short-termism prevalent that, people are looking for allotment. There is always an element of the lottery. Getting an allotment is the key thing. It is not the outlook of the business. And, look at this. Here's a company which will have a capitalization of nearly 53,000 crore, which makes 60 crore a year. So, if somebody is actually, going to invest in a company like this, which is currently listed, people will laugh at it. But not here. And, this continues, and, the IPO boom, which always follows, there'll be all kind of talk that this is going to change the world is changing, and this is a whole new way of, and that is true. But is it true to the extent to justify this? It surely is true that, there are a lot of things which is moving online. The consumer preferences, the consumer habits, all those things. But can it really justify the valuation? At what price, at what level, and how dramatic changes and how permanent that change is going to be? 60 crore profit after all this struggle. In fact, my sense is that it was fine till companies were not making profit. It's Nykaa's misfortune that it's making profit that people can actually value it more precisely.
All right, Dhirendra, always the voice of caution whenever we do discussions on the stock market, always telling people to look at the other side as well. So that's a good view to have. Mr. Ajay Bagga has been listening to that very quietly and smiling. So I'm sure he's got something to say. Go ahead, sir.
No, first I would like to issue a disclaimer, Sonal, that both Sanjay and Falguni are ex-colleagues of mine and good friends. Okay. So whatever I say will be a biased assessment on Nykaa, and a lot of my friends have invested in this and are cashing out. So when a retail investor, who's your audience, is evaluating, I would say listen to Dhiren. He's a voice of reason. There is Mr. Ganesh is here. He has incubated many companies. I have followed him closely. He's created tremendous value. But what is happening in India, as you mentioned, the IPO frenzy, and the typical cycle of the IPO goes in the way that as the market recovers from a downturn, the first few IPOs leave a lot of money on the table for customers. Then slowly the promoters start getting greedy. And then as the cycle matures, you see a lot of issues coming in where not much is left for investors or the valuations are very high. Now, we have had about 6 to 8 companies in the last 2 years listing which actually didn't make money. Earlier, SEBI would ask for profitability for X number of years before they allowed an IPO. Now that condition has been put aside. How do you value this profitless prosperity? It is very good when private equity equity money is being put. But the 12 shares owning retail investor doesn't know any better. And earlier the regulator used to protect that retail investor. Now that protection has gone away. So it is caveat emptor. I would prefer that there will be stronger oversight. And if the private equity funds are selling off, you look at some issues where it is an offer for sale. So existing investors are taking an exit, and the money will go to existing investors, not into the company. I think that ratio has to be looked at very closely.
Right.
And I'm sure Mr. Ganesh will also agree with me that if it is growth capital for the company, it is good. If it is,
let's actually take that to Mr. Ganesh, and this word that you just said, Ajay, profitless prosperity. This is something that we need to come back to as well. But Mr. Ganesh, go ahead.
Yeah, thanks. Of course, we have had two experts speaking in before that. They have been very seasoned. I have a lot of respect for them, so they understand the markets much better than I do. I don't play in the public market, so listed stock, whether the valuation is right or wrong, I would not be able to comment because I just don't know. But I have a different point of view here than what has been mentioned. The fact is that it is a company operating in that ticks many of the boxes that are attractive. It is a platform. It has got close to 2,500 beauty and personal care brands listed, 2 lakh SKUs listed on the platform at one end, and the other end it's also a direct to consumer, that's a jargon, D2C brand. They have their own brands which they have launched. Now both of this is impossible to have this type of size and scale in an old economy business. It is the internet new economy business that does it. Again, Dhirendra mentioned whether the price is right to factor all this, I don't know about that, but let me not talk about it. But this is the way to go. Thanks to pandemic, thanks to internet, thanks to changing consumer habit, we all shop online. This entire conversation is being done online remotely, which was unthinkable 5 years back. You would have sent a crew to my house and done all that. That ship has sailed. That is, there is no going back. People are going to buy shop online. They will want discounts, they will want convenience, they will have lot more selection, which is possible to provide only by models. Now, so if you agree, by new age models, if you agree that personal beauty care and fashion is going to stay, it's not going to go kaput, we are not going to go back into the caveman era, then you have to believe online is the way, Nykaa is a leader, and it will go that. On the other point, I personally feel, I have a difference of opinion with Ajay Baga. It's perfectly fine if the business model does not need capital, primary capital into the company. It's already profitable. Capital is not going to boost in any great way. It is perfectly fine for private equity investors who have come in 6 years, 7 years back to exit. I would not attach any qualitative reference to the fact, even if entire 100% of the money is going in for exiting existing investors. The challenge here is, we have seen this repeatedly, and this is with full respect to Dhirendra and with Ajay Baga, that I have never ever seen, I have been in this market, private equity, venture capital market, building business for last 35 years, never seen an investor say, oh my God, this is a lovely price, this is a great price, let me bet my house and let me go all in on this. They always are skeptical, cynical, and always struggle to justify the valuation. When I raised money for Big Basket or Portia Medical or Home Lane, every time I raised money at X valuation, there were 10 other seasoned investors who sniggered at that valuation, just like I hear sniggers now at this valuation. My request is...
The oh my God reaction means one thing for Ganesh and means something completely else for Dhirendra, which I know, and I'm sure he's itching to get back on that, but we're going to slip into a very short break. We'll come back. So hold that thought, guys. We're talking about this IPO frenzy going on in the country. This is FYI. The big IPO frenzy is on in the country. What should be your outlook? Information is key, and that is what we're doing on FYI. Dhirendra, I'm sure, is very patiently waiting to say a few words. Go ahead.
Yeah, I find a big disconnect in terms of equity. The long term, is a long term investment. Investing in equity of any company, and you are not investing for few months, few years, and most long term investors do that. And here we have come to a point where most of the valuation and it is the allotment ratio, and if you get it, it's tagging, and the likelihood of allotment and selling it. I don't know if a lot of investors who are participating right now can really take a 5-year view at these prices.
That's true. Closing comments, Ajay?
No, all I will say is markets are very frothy, valuations are high. I don't want to comment on this particular IPO given that I am linked into it and I'm not certified to give advice on this particular company. But what investors can do, what is a good way out, as Ganesh also said, we don't know the valuation wise. Over time, 4% of stocks will make the market gains. So it's a good idea to put in a small portion of your portfolio into a plethora of issues. So diversify, hold for a long time according to your asset allocation. And a few of them will really become multi-baggers and they'll take care of your retirement.
Right.
I think that overall, what you have to see is the valuation. You have to see what is the skin in the game for the promoter, what is the business model. I think all those need to be looked at.
Right. Ganesh, last minute which I want to give you, but the only question I get asked on Twitter all the time is, Madam, 12 milne kaise kare? How do we get more valuation? How to get on this bandwagon? That is what everybody wants to know. I don't know if you have any tips, but we are not giving any tips or asking people buy, sell, whatever. This is just FYI. This is just information, but how do you answer those questions?
Yeah, so unfortunately there is no way to get into this lottery, as Devendra put it. So here you have to apply and do that. But if you want to play the lottery, that's fine. But more important is that if you don't participate in equity or in new age equity, you are missing a great opportunity. Otherwise, your money does not even give you returns that beat inflation. So you have to put, like Ajay said, a portion of the money in equity for you to get returns to beat the inflation. Now, when you talk about equity, new age equity is what has gained maximum money for investors worldwide, both in the US. In India, now the new age companies have come up and are offering equity. Retail investor must participate in some of these new age companies' equity so that they are able to create wealth. Otherwise, they will stand up. And
or you could do crypto, but for that you need to watch another show that I do. For now, that's all the time I have. Thank you all, gentlemen, for joining us on this very fascinating discussion. Let's see how the subscription goes and we can return to this discussion. Then that's it on FYI. See you again tomorrow. Bye-bye.